In today's video, I'm going to teach you how to get a small business loan. So in today's video, we're going to cover the different types of business loans, where you go to get a small business loan, what you need to qualify, how much that you qualify for, and how to increase your chances of approval. So let's start with this very important question. Which small business loan or financing is the best for you? To answer that, you must be aware of the most popular forms of small business financing. So there's the term loan, SBA loan, a business line of credit, equipment financing, revenue-based financing, microloans. So these are the most popular ones. Of course, there are others as well. But each of these have their pros and cons, and some may be better for certain situations or industries. But listen, regardless of the type of loan, always check the terms for fees, guarantees, collateral, and early repayment, among other things. Now, before we proceed, I want to be fully transparent with you. My company, Clear Value Lending, offers all of these forms of financing. So term loan, SBA loan, business line of credit, equipment financing, revenue-based financing, microloans. So I'm going to leave a link for you down below. Anyways, I'm telling you this because I want you to know that I'm not going to play favorites and try persuading you whether one is better than the other. I believe that you should get what best suits you. And each of these has their pros and cons. Okay, so let's get started with a small business term loan. So with a term loan, you receive a lump sum of cash and you repay the loan with a fixed monthly payment for a certain period of time, and the interest rate is fixed. So the pros of a business term loan are that they're typically lower interest rates, and term loans will have higher borrowing amounts compared to other types of small business loans. Now, the cons of a business term loan are that they're going to be more difficult to qualify for. So we're talking about being based off your personal credit score, the age of your business, and history of revenues. Now, let me tell you about SBA loans. So a small business administration loan, or SBA loan, is a small business loan that's partly guaranteed by the SBA, which is a government agency. So I want to be very clear about this. The SBA does not give the loan. The SBA just guarantees a part of the loan to the lender. And I want to point out that an SBA loan can have a fixed or variable interest rate. It depends on the type of SBA loan. So the pros of an SBA loan are that they're going to be among the lowest of interest rates and longer repayment terms. So SBA loans are considered long-term business financing, which means that the repayment period is typically longer. Now, the cons of an SBA loan are that it's the application process. It's a long one. I mean, it could be as short as 10 days to get funding, or it could be as long as 90 days. And SBA loans are going to be more difficult to qualify for. So for example, higher credit score requirements. Most lenders, they want to see a minimum personal credit score of around 620, but they're typically, that's the bare minimum. They're typically looking for 690 or up. And you also must show a strong business history. We're talking about cash flows. Now, let me tell you about a business line of credit. So a business line of credit works like a credit card. You borrow when you need to. So you only pay interest on the money that you've borrowed. So let's just say that you get a $50,000 line of credit. That means that you can borrow up to $50,000 whenever you please. So you can think of that $50,000 in this example like your credit card's borrowing limit. So in this example, if you draw $20,000 from your line of credit, then you'll start getting charged interest on the $20,000 that you borrowed. And you'll have to make payments based on only the amount that you borrow, again, like a credit card. And if you pay that money back, then you stop getting charged interest, again, like a credit card. So the pros of a business line of credit are that they give you flexibility, and they also give you revolving access to funds. Now the cons are, you have to watch out for the fees. We're talking about maintenance fees, annual fees, draw fees, etc. Please watch out for those. Now, another con is that you may have a variable interest rate, which means that your interest rate may change. So there's some uncertainty there. And another con of a business line of credit is that there are stricter requirements. Now let's move on to equipment financing. So equipment financing is used to acquire business equipment, which can be pretty broad. So this includes office furniture, machinery, commercial kitchen equipment, medical equipment, industrial equipment, etc. So in equipment financing, the interest rate is typically fixed and the equipment becomes collateral. So a pro tip is that it's easier to get financing for equipment that retains value. It's much more difficult to get financing approved for equipment that does not hold resale value. So the pros of equipment financing are that it allows you to keep cash on hand, and it allows you to own the equipment instead of renting it. So the cons are that this type of financing, it's of course limited to equipment, and it may require down payments, but not in all cases. Now let's cover revenue-based financing. So revenue-based financing is alternative financing that's different from a traditional loan. So this type of financing has no interest rate. Instead, there's a factor rate. So here's how it works. Let's just say that you request $100,000, but the deal is that you will have a factor rate of 1.15. So in this case, you would need to pay back $115,000. So with revenue-based financing, you can determine the frequency of your payments. You can choose to make your payments monthly, weekly, or even daily. However, most people choose weekly payments. And typically there are discounts for early repayments. The pros of revenue-based financing are that it's easier to get approval compared to a traditional loan, and fast funding compared to a traditional loan. The cons are that it can be a higher cost of financing. Now let's cover microloans. Microloans are business loans that offer financing for smaller amounts. And we're generally talking about from $500 to $50,000. So these types of loans, they're generally a good fit for businesses that need smaller amounts of financing. So some microloans may have variable interest rates, but most microloans will have fixed interest rates with fixed payments. Now, I want you to be aware that microloans, as you can imagine, they're not big moneymakers for large banks because they're dealing in smaller amounts, right? So it may be more difficult for you to get a microloan. So the pros of a microloan are that they can get you smaller financing amounts that large lenders are not willing to offer you, and they can help build your credit. And the cons are that microloans typically have higher interest rates compared to other loans because they're considered higher risk. And there are fewer lenders, that offer microloans compared to other loans. Now let's talk about where you go to get a small business loan. Well, the first thing I want to tell you is please check out my company, Clear Value Lending, which helps small businesses like yours get financing. So I want to tell you this, I'm very excited to tell you this, that we built our company to revolve around technology and AI to cut down on overhead costs dramatically. And with the money that we save, we can pass that savings on to you. So honestly, we are taking the industry by storm. And we keep the process simple and transparent. Please come check out our site and see how much that you qualify for. So I'll leave a link for you down below. But besides Clear Value Lending, here's some alternatives for you. So you can get a small business loan from banks, credit unions, online lenders, or from the SBA. So getting a loan from banks, credit unions, or an online lender, that's pretty straightforward, so I'm not going to expand upon that. But I want to clarify with the SBA. So this is straight from the SBA website. The SBA partners with lenders. So it's not the SBA that's giving you the loan. Again, the SBA is simply guaranteeing a part of your loan to the lender. So if you visit the SBA's website, which is at sba.gov, then you'll see here that you can find lenders on the SBA's websites. So once you click that, that will take you here to where you can get connected to a lender. Now let's answer this question. What do you need to qualify for a small business loan? The answer is that it depends on what type of small business loan that you're looking for. But here's a general guideline of what lenders will have as a requirement. So regarding your credit score, all loan types will take into consideration your credit score. At a bare minimum, you need to be in the 600 plus range. So regarding collateral, so most SBA loans require collateral. So there are some exceptions, of course. For equipment financing, the equipment will become the collateral. So you don't need collateral for term loans, a business line of credit, or microloans. However, if you offer collateral, then you can get a lower interest rate. So no collateral is needed for revenue-based financing. Now, regarding the minimum age of your business, generally there is a requirement. Of course, yes, there are some exceptions, but generally they want to see at least 12 months. Now, in terms of revenue requirements, generally, yes, there are revenue requirements. Of course, there can be exceptions, but lenders will request your previous few months of banking activity. So listen, not only will these factors be used to approve or deny you, but these factors will also determine your interest rates. However, if you're lacking in one area, a lender may still approve you if you fulfill or exceed in another area. Now, this is a very important question. How much do you qualify for? So you know what? And you're probably not going to be surprised. I'm going to be very honest with you. This depends on so many variables. Your cash flow, potentially collateral, your credit score, industry, time in business, type of loan requested, etc. So to make your life easier, I would encourage you to just come to our website. We built the calculator for this, and you can get a free estimate of how much you qualify for. So I'm going to leave a link for you down below. Now, how do you increase your chances of approval or your funding amounts? Now, I want you to know this about small business loan approvals. The stats on whether your small business loan request will be approved or not vary greatly. It depends on the source. But regardless of what source that you're pulling from, they all show the same thing, that large banks are less likely to approve you compared to a smaller bank or a credit union. And that small banks and credit unions, they're less likely to approve you compared to an online lender. So many people like to start at a large bank because they may already have a relationship at that bank. But if you get rejected by a large bank, try a smaller bank or a credit union. And if you get rejected by a smaller bank or a credit union, then try an online lender. So ultimately, to increase your chances of approval, try smaller banks, credit unions, or online lenders. And just so you know, online lenders, they're growing in popularity. So if you look back at 2019, 19% of all small business loans came from non-bank lenders. In 2025, that's increased to 25% of all small business loans. And of course, go with the option that offers a competitive interest rate, good terms, and the type of financing that best suits you. And to improve your chances of getting a small business loan, you essentially need to reduce the risk of the lender. So essentially, you got denied because you're classified as a higher risk. Because either your credit score is too low, you don't have enough cash flow, or you don't have a sufficient history to their liking. So you can improve your odds by improving your credit score, which I've dedicated a separate video to. So one of the quickest ways to boost your credit score is to fix any credit report errors. So personally, I did this and my credit score jumped by 100 points practically overnight. Also by applying for the right amount. So you want to request a loan amount that is aligned with your revenue. And also maintaining good banking practices, which we're going to cover in a separate video. So for example, the industry standard is 5 negative ending days. So 5 NEDs will get you denied or severely hurt your chances. Also paying down your pre-existing debts, which lowers your debt to income ratio. Offering collateral is always an option, and improving your financials by increasing your revenues or profitability. So listen, I just want to tell you that I'm a small business owner too. And 2 times in my past, I've taken out small business financing. So I just want to let you know that I am sincerely rooting for you. And I wish you you and your business the very best. Thank you so much. Please subscribe. And I wish you a very nice day. Take care.